Thank you for staying with us. Markets are in motion, and behind every shift, there's a story. The rand is under pressure against the dollar, but firmer against the pound. Gold hit an all-time high yesterday, while oil prices dipped. Meanwhile, global equities are reacting to U.S. earnings season, where corporate giants are unveiling their performance outlook, rather. Closer to home, Eswatini's tariff adjustment is a key talking point, but also just recently we enjoyed the opening of Parliament. Of course, the speech from the throne, some key highlights there as well that surely impact their numbers as they are today. But with inflation still a concern, businesses will be watching every cost input closely. How do all these moving parts connect? And what's the outlook for Eswatini? To help us piece it all together, Bongani Mabuza, Head of Treasury at Nedbank, joins us on the show for our market analysis. Welcome back to the show. Haven't seen you since last year. That's crazy. A lot has been happening in terms of equities, Bongani. It's even harder for me to recap on all the recent developments that we've been seeing, but you are the main guy here. Provide us the insights with what has been happening really that has informed the numbers of the day.
Yeah, no, thank you, Sfiso. It's a real pleasure to be here. And as you say, we haven't been here in this year.
Man.
So I'd really like to wish you and your viewers all the best for 2025.
Thank you.
It's great to be here. Yeah, so it's been quite an eventful week in markets, as you rightfully say. Quite a bit has happened. I think starting with Eswatini, the most significant development that happened is the speech from the throne, which happened last week, and it really is the policy statement in terms of what government is going to be driving for the next financial year. Some very key insights out of there. I think most of it has been covered, but particularly around the drivers for growth in being in the infrastructure space and the developments that are happening and investment that's being attracted into the country. So it'll be very key to see what materializes out of that. And then also we had some key rate decisions that happened during the past week. We saw the South African Reserve Bank last Thursday announce their first interest rate decision for 2025, which was a decision to cut interest rates by 25 basis points. This was largely expected by markets. It was almost fully priced in by markets. And on Friday, we saw the Central Bank of Eswatini also announced an interest rate decision where they left interest rates unchanged. It was a somewhat mixed decision in that some within the markets expected it, but some were also expecting the CBE to move in tandem with the sub. But it's interesting because you will remember that as Eswatini, we still have an interest rate differential with the South African Reserve Bank. So this move marks the beginning of, or it's a move towards closing that gap. It will be interesting to see what the central bank does going forward. And as you mentioned, globally, tariffs have been the talk of the town. The American president, Mr. Donald Trump, announced tariffs. 25% tariffs on Canadian goods, 25% tariffs on Mexican goods, but subsequently those have been delayed for about a month. He also announced 10% tariffs on Chinese goods, and we've seen retaliatory tariffs of 15% on selected American goods announced by China. So that is driving the narrative around world markets if you look across FX, commodities as well as equities.
Yeah, but that gold record high, I think that's such a great talking point there. We're seeing it soaring at what, $2,868 per ounce. What does this indicate, regarding investor uncertainty? Are central banks globally increasing gold reserves as a hedge? What is happening really?
Yeah, I think that's a good question and an interesting development out of the markets, and I think it speaks to expected volatility in the markets, because as we know, gold tends to be a safe haven asset that investors rush to whenever there's uncertainty in markets, or whenever they think that they're likely to suffer losses in certain asset classes. So I think the gold price reaching an all-time high in yesterday's session is really testament to that. It's really the uncertainty that comes out of the tariffs.
An interesting development, especially for me, right now, we saw breaking news around lunch. The Minister for Natural Resources and Energy, Prince Lonko Kela, speaking to 8% tariff hike, reducing it significantly from what Eswatini had initially proposed. But also, what we are seeing here under our commodities, oil price dip. I think we want to juxtapose what is happening here. Brent crude is down 0.81%, $76.79 per barrel. With electricity tariffs being a hot topic, could lower oil prices bring relief to energy costs?
Yeah, thanks. It is an interesting development because we did see the announcement of the one Eswatini tariff hike yesterday, and then the decision by the administration today to adjust that. And then in terms of, if you look at globally, what the oil prices are doing is that they are just reacting to the developments that are happening in Gaza, with the announcement by President Trump yesterday with his Israeli counterpart, but also a reflection of the pressure that Trump has put on an OPEC member, being Iran. So what these will mean for the consumer, should they be sustained, and I think that's the key part, is that they affect inflation. They affect our cost of purchasing goods, because, as you know, oil is a key part, or the price of fuel is a key part of our economy and of the food basket.
Yeah. A quick one on equities, the reaction to U.S. earnings season. If you have alluded to, the S&P 500 is up, driven by strong earnings reports from major U.S. companies. How much of this optimism is justified, and does it spill over into emerging markets like ours in Eswatini?
Yeah, no, thanks. I think it remains to be seen how markets are going to react to that. But what we did see yesterday is that earnings season continues, as you rightfully say. We saw Alphabet, the parent company of Google, their shares dipped by about 8% yesterday, due to lower than expected cloud demand. We saw AMD, which is a chip maker, dip by about 9% yesterday, and this was due to a low, or a very bleak, if I may put it that way, AI outlook. And we saw Chipotle, the restaurant a company in the US, dip about 5% due to low sales growth. On the back of that, the overall S&P 500 was still up, which is a reflection of cooler sentiments after the Mexican and the Canadian tariffs were delayed. And today we expect Disney and Uber to announce their earnings. So it will be interesting to see over the next couple of days how equities markets react to the earnings by these major companies, as well as the policy uncertainty stemming out of the US.
A lot of policy uncertainties around the world right now. But a quick one before we cap it off. The currencies today, the rand in focus in particular, it is down against the dollar, but it's up against the pound. What is the primary reaction here to these global market trends?
Yeah, thanks. That's a keen observation. To be quite frank, it is ex-rand activity that is driving these prices. The rand is relatively stable right now, but what you are seeing is the other currencies react against the dollar, and because of everything that is happening around tariffs. The rand is pretty stable until tomorrow, as we are expecting the State of the Nation address by the South African president tomorrow evening. And we do expect quite a bit of possibly a bit of volatility either tomorrow, just before or just after the State of the Nation address by the South African president.
In the interest of time, I'm afraid we can't really deep dive into the euro and the GBP, but we are seeing they are on the green there. But this has been Bongani Mabuza, Head of Treasury, Nedbank Eswatini, giving us his insights on the market rates of the day. Thank you to him, but thank you to you as well for staying with us on the show. This has been Nedbank Business Watch. Have a good day. Bye-bye.